everyone, welcome to Agent Mastermind. I'm so glad that you are here. I'm Vicki. Scott is en route. He's traveling, so we had a little bit of a scheduling issue, so I'm going to kind of fill in for him. And I'd like to welcome Jim. Jim, congratulations, and thank you for coming on our class today. I'm so excited to talk and learn a little bit. Welcome. Good. So we're going to go ahead and get started. I'm going to go ahead and click the recording, and we will begin like right now. So I'm going to kind of turn it over to you, Jim, and you are known, Scott says, as the credit expert. So we feel very honored to have you with us. So thank you so much.
You're very welcome, and I want to say hi and thanks for sharing your time, which I know is very valuable for all the agents out there. And I think what you're going to learn today is items that you can use not only in your marketing but also for your personal knowledge. So when it comes to credit, a lot of stuff is going on with people's personal credit. It's affecting a lot more of our lives than it used to, and I think you're going to find this very, very interesting. But my focus today is going to be on, are you monetizing those credit challenged borrowers, or are you just sending them down the street to your competitor? So I want this, hopefully after we're done today, we'll let you think a little bit about what you're doing with these people coming into your office. I did dig into some marketing information. Are we ready?
Yeah. Hey, Jim, I just want to do a shout out to everyone. Can everyone see Jim's screen? Can you hear everything good? If you could just answer that yes or no in the question tab, then I would be able to see that. Yep, everyone's looking good, so awesome. Thank you. Okay, we're ready to go.
Awesome. Well, I did some digging a little, and I wanted to pull up some information on what's going on in the market. You guys may or may not be aware of this. This was in my local paper just last week, and the information here that I wanted to focus on was 83% of the current renters, according to NAR, right here, National Association of Realtors, found that current renters hope to own a home in the future. Right? Now we know what's going on in the rental market. A lot of people are renting and the rents are going up. And they're discovering, with the rates so low, that it's actually less expensive to own than it is to rent. So I want you guys to be aware of that market. So that's another good reason that you may want to work with these people who may be credit challenged. This just came out on March 2nd, so I cut and pasted the headline off of this. Millennials is a larger market than the baby boomers, and they've been not as anxious, let's say, to buy homes as the baby boomers were. But I found this was interesting. Almost 2/3 of millennials, let me get my little magic marker back here, almost 2/3 of millennials down here say that home ownership and the American dream go hand in hand. Hispanic, Asian, Black respondents all agreed that more than 60% of them all want to buy a home, and with among the whites it was just slightly below 60%. But that's a great number because they've typically wanting to go to urban areas and they're renting. But I think they're finally starting to see that it might be cheaper for them to buy something instead of renting. So you've got your rental market and you've got your millennials, to almost 2/3 of them saying, you know what, it's time to make a move. That's good news for you guys and everyone on the call today.
Right. We're getting, can everyone see, I'm getting some comments that says no video. Do we see a video? Rachel, are you on by chance? Can you see the video on your end?
Yep, I can see everything good on my end.
Okay. I apologize. I don't want to interrupt you anymore. I just wanted to make sure.
Fine. Okay. We want everybody to be able to see and hear.
Yeah, me too. Okay. So I think we're good to go. I apologize.
No, that's quite all right.
Thanks.
All right, so who am I? Well, I've spent a little bit of time in your industry. For about 20 years, I had my own mortgage company here in Indiana. And then I also was a realtor, more not as a practicing realtor, for about 30 years. So I've looked at thousands of credit reports. I've sat in thousands of closings, just like you guys have, on both sides of the table. So I just want you guys to know that I'm very familiar with the process that you're going through with all of your clients. And currently I'm serving as the Hamilton County North Chamber of Commerce. I'm working on my next book. I love to get out and speak, So if any of you are looking for a speaker in your area, I might be available to do that. Just get a hold of me. But I am here to serve, and that's part of my mission. So, but what I want you to think about today is, do you view your client's credit as an obstacle or an opportunity? So when you first talk to that client, everyone wants a home, then they get all excited, then you find a house, and then the loan officer, the mortgage professional pulls the credit and says, oh, your scores aren't quite where they need to be. So the question you need to ask yourself today is, what are you doing with those clients? Well, I'm going to give you a solution to that. But first, we need to also understand that with credit reports, there seems to be a lot of mistakes, and a lot of people don't understand how to fix their credit. It's a big dilemma. So 83%, according to Experian, have checked their scores recently. 42%, nearly half, want to improve their scores but don't know how. That's a solution you can now provide your clients.
Yeah, that is huge. And so it's nice to know that you kind of get stuck. You don't know what to do.
Exactly. And then the other side of it is, according to this Federal Trade Commission study, is that 1 in 5 consumers had errors on their credit reports, which is 20%. There are some reports saying that it might even be higher than that. So, so we got a lot of studies going on at FTC, and then according to the Consumer Financial Protection Bureau, they had 45,000 complaints for just credit bureaus, just the big 3 credit bureaus. And the #1 complaint was incorrect information on a credit report, 77%. So I think we have to take it almost for granted that many times for many of our clients, there's items on there that are reporting incorrectly, and it's just not their fault. And that's what we found working on thousands and thousands of clients. So what do we do? What can we do to help your clients? Well, our mission is to help the consumers who are working their way through a financial crisis. As you can see from the screen, a lot of people think, well, we just work with homeowners or potential homeowners. We're working with people who've had a divorce. 50% of America. Medical issues can traumatize you. Going out of business or a job loss, huge for all those entrepreneurs. Identity theft is an up-and-comer. You look at all the stores that have those credit cards, you know, Home Depot, Target, all those identity theft issues. We can help those clients too. And of course, foreclosures, short sales, bankruptcies. We'll love those clients. A lot of the market mayhem back in 2000 and 2007 and 2008 were foreclosures and short sales, and we help a lot of those clients. But the good news is those accounts are now 7 years old. If an account's 7 years old, all those can be permanently deleted. So even if you've got clients that has old stuff on there, they don't need to wait. Now's the time to go in and clean all that stuff up, and we can help them do that. Another question that we get a lot is credit repair legal? I mean, can you guys do this legally? Well, the answer is yes, because they established the Fair Credit Reporting Act, and the reason they established that is because of all the misreported information on the credit reports from the 3 bureaus. Before 1970, there were no laws for the consumer to protect yourself. So whatever is on your report, you couldn't get it fixed. You had no rights. So now you have the right that everything on your credit report, #1, is verified that it's yours, and #2, and probably more important, that it's 100% accurate. And just so you guys know, when we do dispute information, the bureaus have up to 30 days by law after they receive it, the dispute, to respond. So when I talk about a round of disputes as I'm going through the presentation, a round to us is a 30 to 40-day cycle. And then the other reason, or the other law that protects you and governs my business, which is as I'm a CRO, a credit repair organization, is there's actually a law that governs us. So if credit repair is illegal, they wouldn't have a law governing credit repair organizations, or what we do. So what's the big secret? What do the credit bureaus do? How do they make their money? Well, they make their money, oddly enough, by selling your personal and private information. So that's how they make their money. So if your scores are lower and they're selling a list to a credit card company, they make more money off of a secured credit card or someone with lower scores than they do with people with great credit. So the bureaus are pretty much just reselling your information without your permission. And if you think about it, even today, now they're making more money because now you're buying identity theft protection or you're buying credit monitoring. They're selling you your own information over and over and over, month after month. And it's really incredulous what this whole industry has done. But they've got a lot of lobbyists, and that's why a lot of laws aren't passed to protect you even more than what we have now. That's the big battle. So we're here as your consumer advocate. We're here to help. So our question to everyone is this fair to you? We've got 30 to 50 to 79%, according to the Public Information Research Group reports, of credit reports have a mistake on them. The second question is, did anyone out there ever choose to participate in having their information stored at the credit bureaus? I mean, this just happens. So everybody's information automatically goes on a bureau if you want to participate in the U.S. society. Credit scores now affect your car payments, mortgage payments, your insurance, both your car and your home, jobs, and promotions. If you're in the military, if you guys are doing VA loans or working with veterans, they have to have clean credit to keep their security clearance. Or if you've lost a job and you're going in the finance industry. Even after the shakeup in 07 and 08, with everything that went on in the mortgage market, in the real estate market, a lot of us were affected. I know I was affected as a mortgage broker, and a lot of real estate agents. I mean, our jobs just crumbled, and a lot of our credits took a hit for a period of time. And last but not least, the scoring guidelines are a secret. We know a little bit about the pie chart, which I'm going to show to you for mortgage FICO scores, but other than that, all of these three companies, how they calculate your actual FICO score is still a secret, and they can change it. So our question to you is that fair to you? So life happens. Life happens to all of us. Could be identity theft, could be medical issue. This is a quick story I want to share with you about Ryan. He's 25 years old. And Ryan thought he had the flu, but at the end of the week, he went into the hospital in the emergency care, and he found out that both of his kidneys had failed with a rare disease called Goodpasture syndrome. And Ryan was working, going to school, regular 25-year-old, trying to get through school, and all of a sudden, he had a financial crisis on his hand. He couldn't work anymore, and actually Ryan almost died, but he was in the hospital for 6 weeks, had about 4 blood transfusions before they found out what this disease was. And this disease actually attacks your kidneys and or your lungs. And the reason this story is interesting to me is because Ryan is my stepson. And Ryan's kidneys both were taken out by this disease. And we took him down to the Indiana University Medical Hospital after the disease had passed in 6 to 9 months to get him on a kidney transplant. So Ryan had gone through this process where he'd almost died in the hospital, was on dialysis now, and didn't want to continue on that path. So we took him down to the hospital, and we sat down with him, and he signed up for a transplant. And they said, well, would anyone like to be a donor? And usually first cousins are a better match. And they looked at me, and none of one had stepped forward, and I said, well, what are the odds of me being a match for a stepson? And I was 50 at the time. So I gave him a drop of blood, and a week later they called me at Costco. I remember taking that call, and his kidney coordinator became my kidney coordinator. And life happened to me and Ryan, and this was a picture of us before surgery at 5 a.m. I'd already had my happy shot. So I was going into surgery, donating a kidney, never been in the hospital before, never broken a bone in my life, and Ryan was going in about 2 hours after me. And I will tell you that the people that work with you guys, Carl and Scotty and the whole group up there, were very supportive through this whole process. But 5 days later, I came out, -1 kidney. Ryan had mine. His was working. I was home in 2 days. Ryan went home 5 days later. And it was a successful kidney transplant. Yeah. So this was exciting. But this is what can happen. Life happens to everybody. So how can we help those people? because that's now my new second mission, and I'll share with you a little bit more about that later. But let's get back to the credit restoration. Ryan has rights under this Fair Credit Reporting Act from 1970. As I said, you have a right to have everything verified on your credit report, that it's yours, and number two, that it's 100% accurate. And again, they have 30 to 40 days to respond. Those are your basic rights that we're enforcing. So essentially, when we do a dispute, it's an audit on your credit report. One huge credit myth I want to share with you, because people say, well, how do you get this credit fixed? How do you do this? Well, here's a huge myth that people don't know. There is no law that states that negative information has to be reported on your credit report for 7 years, 7 months, 7 days, or 7 seconds. The law states that negative information can stay on your credit report for up to 7 to 10 years. That's all the law states. A lot of your collection companies, small finance companies, some of the buy here, pay here lots, when we're looking at someone's credit, only report to one bureau. Some companies report to 2, and not everyone reports to 3. That's why when you pull a credit report, for mortgages especially, you're pulling all 3 credit bureaus. And the scores typically are never the same. And this is why you can have a huge discrepancy. You could have a negative item just hitting one bureau. And as we help you clean up your credit or restore it, you may have one score come up and the other one stay down. We may get something off of one bureau 1 month, but it doesn't come off the other one. And this can happen, but that's why it happens. So very quickly, instead of you trying to explain all this to your customers, and this is a solution for everyone out there in the field today, and I'll give you my contact information at the end, we make it very easy. We're going to offer your clients a free credit review. So if you have a client that you're turning down for credit issues because they can't get a home loan or get qualified, ask them if they would like a free credit review from an expert. If they say yes, that gives us permission to call them. All you have to do is forward the name, phone number, and email address to info@usccra.com. And then even if they don't have a copy of the credit report, we have 2 websites they can go to get all 3 bureaus with consumer scores, not mortgage scores, for $1. All right, so we're going to make that easy. We're going to go through this whole process and explain the information to your customers as we do their personalized private audit and review. So where can you get these credit reports? People always ask us this question. Well, the only place you can actually get the free one is www.annualcreditreport.com. The FTC passed a law about 3 years ago that everyone had a right to one free credit report from each bureau every 12 months. So you can go to this website. Now what happens when you go to annualcreditreport.com is you're going to get 3 tabs. So it's going to send you to TransUnion, Equifax, and Experian separately. You have to log into each of those bureaus separately and then pull each credit report. Some of them you get online. Sometimes they have to mail it to you. So just so you guys know, you can actually sometimes have to wait 2 to 3 weeks to get these in the mail for us to do a review. That could be a little bit of time, has some time constraints on it, and a lot of our customers seem to be in a hurry once they're in the house buying mode. So here's where we send them. PrivacyGuard.com, CreditCheckTotal.com. Both of these websites for $1 have a trial period. Now they change it. It's either 7 days, 14 days, 21 days, but it doesn't matter to us. We need one good credit report to do a review, and this is a tri-merge, and it has consumer scores. We're not overly concerned about the scores at this time. I need to see the data to do an audit. So it's just data-driven. But they'll have it. Then they have the opportunity to keep the credit monitoring if they so wish. Now, the other question we get is, what if my consumer wants to see their actual mortgage score? There is only one place that a consumer can go online and get their actual mortgage scores. And that site's, the last one, is www.myfico.com. This is actually FICO's website. It's expensive. It's $30 to $50, but you will get 2 sets of mortgage scores, FICO 08, and you get FICO version 5, 4, and 2, which is what the banks use. You get your auto scores, you get your credit card scores, and you get a couple generic scores. These credit reports are usually 60 to 80 pages or more. The first 10 pages are all of your FICO scores. So it can be very confusing. A lot of people don't even know that these 4 scores, when FICO comes out with a scoring model, that it has all these different types of scores. And then you have to think about it like this. They're all risk-based scores. So if you're buying a piece of furniture for $2,000, the scoring models over 2 years is going to be totally different than if you're spending hundreds of thousands of dollars over 30 years for a mortgage. So all those models are different. The other thing that a lot of people don't realize is on your mortgage credit, they pull all 3 bureaus and use your middle score. Automobiles and most other lenders only pull 1 credit bureau. They don't pull all 3. But you want to repair all 3 because you never know which bureau all these other companies are going to be using. Here's a healthy credit tip for you, and I threw a couple of these in today. If you guys don't like to have your information sold by the bureaus, you can stop it by going to www.optoutprescreen.com. And this will stop all those offers that you get. As I said earlier, the credit bureaus make money by reselling your information. This is one way to stop them. I think when you go to this, you can do a 5-year, either 5 or 1 year opt-out or an opt-out. This tells the bureaus you do not want your information sold any longer. It'll cut down on your junk mail, and they'll stop reselling your information. So this is a right that you have. We set a lot of our clients up with this when they first join with us. We do this for your customers, so we'll do that for them. Again, I talked about the different scoring models. Mortgage credit scores are typically 350 to 850. Automotive scores can be FICO or Vantage scores, 250 to 900. Bank card scores are different scoring model, and then you got your consumer credit scores, could be 300 to 900. Those could be Vantage scores or FICOs. We're primarily interested in the FICO mortgage scoring model, of which there's 52 different versions. Not too complex, right?
Right.
Oh, so what makes a mortgage score? Let's stay focused on just this one mortgage score. How the FICO score breaks down a mortgage score. 35% is payment history. So on-time payments are the #1 thing that the client needs to do. If we have a client that we look at their credit report and they're not making their current payments on time, that is the #1 thing they need to do. If you send us the client that can't make their payments on time, we will not enroll them. If they can't pay their bills, their score is not going to go up. So they've got to get that under control first and foremost. 30% is the amount owed. Now this is where the revolving credit comes into play. This is 30% of your score. And this is where the credit cards are a huge piece of your score. In fact, the second largest piece. So it's not only important that you have one credit card because it's 30% of your mortgage score, it's also important what the balance is when the mortgage professional or your banker pulls it. The balance is your debt utilization ratio. We're going to talk about that a little bit more in a minute. Credit history is 15%. History starts on a credit report when items are 7 years old. 7 years old. So if you've got newer clients like your millennials and they haven't had a lot of credit, they're probably not going to get a lot in that category, but they need to be aware that on these older accounts, they don't want to delete them. We've had clients that come to us and they're trying to delete everything off their credit. Don't ever do that because your old history, your open date, is calculated into that 15%. You got 10%, which is credit mix. Those are the type of accounts that you have. Installment. Credit cards are all revolving, your department store cards. Your installment loans are your student loans, your mortgages, your car loans. Installment loans have a beginning and an end. Revolving credit revolves every month. That's why they're called revolving credit. And 10% is your new credit or your inquiries. All right, how powerful is a credit card? I'm going to show you guys this report. I couldn't believe this when I pulled it. But the credit bureaus only match a certain amount of data to pull a credit report. But if you look at this credit report, this was pulled with no Social Security number. You can see the arrows, they're gone.
Yeah.
The arrow up here on the right where the one's pointing to 1990 at the top right, that's where the birthday's supposed to be. So here's a lady's report that was pulled with minimal amounts of information, her name only, no social security number. Look at those scores. 803, 772, and 736. Great scores, right? You could get them alone tomorrow. And now look at the top, up at the top up here. Let me get my little highlighter out. I'll just get the spotlight out right here. She's 20 years old. Okay? Now, how many accounts does she have? I had to save this one. I couldn't believe it. One account down here. Oops, can you guys see that? One account,
I can't see below.
I don't know if I can move that. I don't know why that's going off my screen a little bit. She's got one Old Navy account down here she's had for 70 months. And you can bet this is an authorized user account. So this is not even hers. So this is the power of one credit card. You guys can't see it, but down there she's had it for 70 months. She's 20 years old, so guess what? She got this when she was 13. Impossible. But she can be put on as an authorized user. One credit card with a 5-year history has got these kinds of scores. This was the only thing on her report. That is the power of one credit card. So in its simplest form, we do this with people after bankruptcies or a financial crisis. If you want to rebuild your credit, the quickest way is to do it is with one credit card. Now people say, well, what if I can't get a card? Well, then you have to try and get a secured card. We'll give your clients a place to do that. Or over here on the right, you can be put on someone else's account as an authorized user. Now, an authorized user means a family member or a friend will put you on their credit card, and what happens is all the history shows up on the credit report, which is exactly what happened with this Old Navy card. It's all history on the credit report.
I never knew that, so that's awesome.
Yep. So we can start out with a couple credit cards. You can get people score up after a bankruptcy in 7 months in the mid-600s, mortgage scores. We do it all day long. I wish I could get them all. Now, I know you guys can't get them a home loan for a couple of years, but that's okay. But, man, they can be ready. They can be ready in 6 to 12 months after a bankruptcy, score-wise. So these people that think that they're in debt prison for 7 years is entirely not true. All right, so what are these reason codes? Back here, you'll see these codes. This is how we actually do our work. These codes right here, these are called reason codes. So these are your clues to why your scores are what they are, and they're in order of importance. So you've got too few accounts currently paid as agreed. Lack of recent installment information. Oh yeah, all she's got is one revolving Old Navy. Lack of recent bank revolving information. So I don't know if they've used this card in a while, maybe not. Length of time accounts have been established. Well, yeah, she's 20 years old. So those are her reason codes why her scores aren't any higher. But 803 is a great score for just having one account, being a 20-year-old. But they got the advantage of all this history from this old account, whoever put this on there for her. The other thing that I wanted to show you real quick before we go off the screen is here's the version of FICO. This is a 04. This is a version Classic 2, and this is version 5. So right now, remember I said there's over 52 or 54 current versions of FICO. The new model that's out is FICO 08. Discover Card and a lot of the credit card companies are giving you free FICO scores. They're FICO 08. They are not your mortgage scores. These are the ones that the banks and the mortgage companies are still using. Version 5, version 2, and version 4. Is that confusing yet?
No, I'm following you. That's great information.
A lot going on. Yeah.
Yeah.
But this is what we educate your people when we do our free reviews. So the reason codes. Most lift only the top 4 reason codes. That's all we need. How they affect your scores coming later. The reason codes are ranked from top to bottom. So the one that hits your scores the most is the top reason code. So when we see that it's revolving credit and that the balances are too high, then we know that their credit cards are probably high before I even get started on the credit report. Each has its own predictable variables by the credit bureaus. That's why they're all different scores. Each bureau has their own models. And usually the top scores you're going to see are 830s to 840s. It's hard to get a perfect score. Finding errors and misreporting information. Public records. We always ask the clients, a lot of people just think if the public record like a judgment or a tax lien is released, that it's done and it's accurate. Well, we look at the open date, the file date, the close date. We also look, is the date on there that it was released, because that dates how old it is, so you can improve and score that way. And we get the balances zeroed out if they are released. Okay? Tax liens. If they're paid federal tax liens, there's a program out where you can get these deleted if you're making payments over 6 to 9 months. Even if you've only made 6 to 9 payments, this program says that they'll remove them. But we've had 99.95 success getting the paid ones off. So this is a total deletion on something that would stay on your credit report for 10 years. So that's huge.
Great.
Yep. Late payments on open accounts. 30-day lates can cost you 50 to 100 points. A new collection can hit you 50 to 100 points. Think of it this way when you look at a credit report. The only thing that drives your scores up is your good open credit. Hopefully that one installment account at least and one revolving. The only thing that drives your scores down is the new negative items. It's the newness of the negative item that hits your scores the most. So we're looking at dates on all these. Revolving accounts, we talked about this. You need at least one reporting to the bureaus for a good credit mix. And the number one disputed item on a credit report is collections. They are the worst. 40% of the items disputed handled by the CROs can be linked to collection items. And here's why. The credit reporting agencies, Equifax, Experian, TransUnion, said they had 8 million contacts from consumers. Each one disputed one or more items, and most of those are collections. I mean, look at this, 32 to 38 million items disputed on credit files. So a lot of people are disputing a lot of information. What we found is, number one, people don't know how to read the credit report, and number two, if you don't know all the laws, how do you know what's even misreporting? I'm going to show you some of that. So someone asked me once, well, how much does a new collection affect your credit score? And I will answer that. It depends on what your score is before it hits. But I'm going to take an extreme example, and I saved this one, and I have the before and after credit reports. This Experian score down here, I know it's blurry and I apologize, was a 698. They got one collection on Experian, brand new, that hit for $51, a little medical bill. 182-point drop. One $51 collection affected their scores. So if this collection company would have reported this to all three, all the scores would have dropped probably 180 points. Huge. To go from an 800 to a 600, that's huge on anybody's loan. Car loan, mortgage, insurance, whatever is going on in your life at that time. So what we were able to do is get this removed, and then the score came right back up. So we called the collection company, said, hey, didn't know this was on here. You can just ask them. I'd be happy to pay it. Will you delete it? If it comes off, what you have to remember is your credit score is a snapshot in time. Your score and your credit report doesn't sit anywhere. It's built at the exact second you order it. So whenever you pull a report, it goes out to all the databases, sucks in all the data, your card balances and everything at that exact moment, and your credit score at that exact moment is a snapshot in time. So I always use a hand to hold up my camera, but just think of it like that. So it's a snapshot in time. I tell people if you can change the picture, we can change your scores. And this is a perfect example of that. And you can see what happened to the reason code up here. Derogatory or public record or collection filed, number one item, right there. Right there it is. Where these are all based on just other stuff. But these are great scores. I mean, you can get any loan you want with 811 and 799 scores.
So do you find that you can mention that you just call them and you ask them if we pay it, they would remove it? Is that common?
Yeah, actually coach the consumer to do it.
Okay.
Yeah, we just told the consumer exactly what I just shared with you. We said you just call them on the phone and say, I didn't know this, I just pulled my credit. We tell them, I didn't know it was mine. First, you want to say, verify that it's mine. So you call Financial Credit Services on the phone, say, hey, I just pulled my credit, this showed up. Can you verify this is mine? That's your first right. They should be able to tell you the doctor's office, the hospital visit, whatever this $51 is for. And usually what they'll say is, oh yeah, it was this time, send it into your insurance, this was a copay, it didn't get paid. Oh, great, be happy to pay it. Will you agree to delete it with payment? That's a negotiable item to get them to agree to delete. That's a whole nother tactic. But here's another tip for you on collections. Before a collection company can put a collection on your credit report, they have to send you a letter 30 days before they put it on. It's called a dunning letter. They have to have that in their file. If they don't, you can get them to delete every time because they've broken the law. So just another tidbit for you there.
And that's called, what was that called again? A dunning?
The legal name for it is a dunning letter. We call it a 30-day notification letter.
Okay.
So legally, you're supposed to be notified 30 days because then you have a chance to call the collection company, and they send you these letters in the mail, and it'll say at the bottom, we're going to report this to the bureaus. If you don't respond, we're going to validate the debt and put it on your credit. Well, look what's going to happen. Your score could go down 50 to 150 points. Well, in this case, it went 182 only because your scores are so high. Now, if you had a 600 score and a new collection hit, you might only go down 50 points. It just depends on where your scores are at before this negative item hits. But I gave you an extreme example here because people say, well, how much will it go down? I always have to use a range.
Okay, thank you.
Yeah, you're welcome. Credit scoring tips. All right, revolving accounts are more important than installment accounts. They're a smaller factor. You want to pay down your balance, debt utilization ratio on all of your credit cards before you make a major purchase. Do it the month before. Balances when you pay down a credit card do not hit the next day. That it may hit your credit card company, but they have to report once a month usually to the bureaus. Then you're in the bureau cycle to update your file. So we tell people usually 30 to 40 days before that's going to hit your report. So if you know you're going to go buy a car, or if you know you're going to be doing a mortgage pull, the month before, just pay all your credit cards down. And you can control, your scores can change on a mortgage up to 60 points with the balances on your credit cards. People don't realize it's that big of a swing. And you have to do all of your cards, not just one. So the algorithm looks at each card individually and all of them together. So if you have a $200 credit card with Macy's and you leave it at 186 and you got a $6,000 card with a zero balance, it doesn't matter. It's going to use that little Macy's ratio of 90% and crush your scores. And people don't realize how important that is. And that's part of what we go through on the free review. So we cover all this with your clients. So don't worry about it. But I just want to give you guys some tips because this is all good information for consumers to know.
Oh, absolutely.
So people ask me, how many revolving credit cards should I have or accounts? 3 to 5 is ideal. You can build your scores with one. I mean, I just showed you that one. I mean, that lady had great scores with one little Old Navy card. That wasn't even hers. She was only 20. Had to be one of her parents or something. And pay before your reporting date so the lower balance shows up, and it can, again, boost your scores. So if you call your company and they tell you, yeah, we report on the 20th and you want to pay them on the 15th, then you know that lower balance is going to be there next month. If not, just wait the 30 days. All right, a few more tips for everybody on the call. Spreading the balances out on the credit cards still work. So we have some clients that don't have the funds to pay down their balances. So if you've got two cards, $2,000 each, one's at 0, one's at 2,000, it's at 100%, spread the balances out, you can do 50-50, your scores might jump 30-40 points. So spreading the balances out does work across the credit cards. And I put this in here yesterday. Don't forget about the care credit accounts. A lot of people don't realize what we're finding is these are all showing up as revolving credit. And people use these for medical, the GE Care Credit. So they have a surgery. We're seeing a lot of them with $5,000 limits, but they're maxed out because you had dental surgery, veterinary surgery for your pets. And those are revolving accounts, and they'll say, oh, I got a 3% rate on that, or interest-free. I'm like, okay, how bad do you want your home loan? I mean,
right.
It's another revolving trade line, so it's up to the consumer at that point, but I think they forget about that one because they think it's an installment loan, and it's not. Almost always it's revolving credit. So don't forget about the Care credit cards, and we can check it on the credit report during the review. Authorized users still work with credit bureaus, so if you've got a client that doesn't have a card, they can get on the spouse's card that has 5 years history, 10 years history. If you got a parent that's got 20 years history on a card with a low balance, oh my gosh, their scores could jump 100 to 200 points in 30 days. So the authorized user still works. Beware of companies that will sell this online. Don't do that. The bureaus are setting up stipulations now where they want it to be a family member or a friend. So you can't just go out and there's places that are selling it. I'd highly recommend not to do that. If you can't find a family member or a friend, just work on getting your own secured card and start building that credit card history up yourself. Okay, credit bureaus can report a 30-day late, even if it's 1 day past due. Now, most of them don't. So I just like to bring that up. People don't realize that. Paying off a collection and a tax lien will usually not increase your scores. A lot of people think, well, if I pay this off, what's my score going to jump up to? Because they believe that when you pay it, it's going to get deleted. That's also not true. Items can stay on your credit report, remember, for up to 7 years. By paying off a collection or tax lien or anything else, all it does now is supposed to show a zero balance and the date that you paid it. You still have a collection on there. It still has an open date. It's being calculated into your overall score. So now instead of a collection with a balance, you've got a collection that no longer has a balance, and now it's going to start to age. So the immediate effect is that your score is not going to change, and sometimes your score will go down, and this drives people crazy. They say, well, how can that happen? Well, there's a spot on the credit report that's called the DLA, and the DLA is the date of last activity. If you pay off a collection that was opened in 2010, today, it could show up and show 3 of 2016 in the DLA because activity is a payment. And I've seen actual credit scores go down 4 to 15 points temporarily because you just paid a collection. So you got to be careful when you're doing that. Yep. If you can get them deleted, that's a no-brainer. If you got someone with 10 collections and they just say, look, I got my tax money back, I just want to get these behind me, you don't worry about it, you go in and knock them all out. You take the hit and just get it done. So, but we'll walk them through that process with what their goals and plans are. Medical collections. This is coming out in the new version of FICO. So FICO 08 and FICO 09 is coming out. I can't believe this. The lenders haven't even went to FICO 08. I mean, they're still on 5, 4, and 2. But medical collections in the newer FICO models is going to be great because almost everyone has these medical collections now. We see them every day. In the newer models, when you pay them, they no longer will count against your score, even if they're on your report. So the bureaus have realized a lot of people are getting tagged for old medical collections. And here's the other secret about collections that no one realizes by leaving them on your report. At any time, a collection in that 7-year period can get resold, and then the new collection company comes on your report, and the date open is today's date. That slams your score like a brand new collection. The other collection company is removed because this one now owns the debt, and that's entirely legal. It's the date that they opened it on your credit. Now the date it's going to fall off, the 7-year date, is still the date you defaulted with the original creditor. That should be your date of last activity. Not always. That gets misreported, so just so you guys realize that. So the danger in leaving the collections on there is they get resold. I just had a client yesterday I did a review with, and they had 3 of them in the last year. She's got like 12 medical. She said, well, I've got this cash. I said, well, let's pay them all off then. You got $2,000 in bills. You got 40 grand in the bank. You want to buy a house? Let's just knock them out. And she had one every quarter almost hit her scores and knock her back down. She says, we keep working on our credit, but our scores never go up. That's why. That's the other reason why 40% of what we dispute is collections. It's huge how they can affect your scores over and over and over. Visa and MasterCard score higher than your department store cards. Just so you know, not much, but they do, and higher than secured cards. Doesn't matter when you're starting. You want to get whatever you can get. So if you can get a Fingerhut card and it gets you going, get a Fingerhut card. Joint accounts on credit cards and autos can be messy after divorces. I put that in there because I see that every day. And I know people don't like to think about that, but it is something to think about. Because even if you get divorced and the divorce decree says they're responsible for this card, the lenders don't care what your divorce decree says. If you both signed for the debt to be responsible for the debt, you're still responsible for the debt. So if one spouse goes out and they're on the car loan and the credit card and they file bankruptcy, they're now no longer liable because they legally filed BK, and the other spouse is liable no matter what your divorce decree says, and it's a mess. And if you're both on the card and the other person is supposed to be paying it and they stop, now your credit's being controlled by the other person. They just trashed your scores. And people don't realize all that's going on. So American Express, a little bit different animal. Some of their cards are business cards. Some are revolving debt, so we just keep an eye on those. Scoring effect by age of account. The older the account, the better. We talked about history starts after 7 years. Don't close your old credit cards for that reason. And the other reason, it helps your utilization ratio. So even if you've got a closed credit card with say a $5,000 balance, it's going to be calculated in your utilization ratio. And conversely, if you've got a defaulted credit card, that one's being counted too. So if you defaulted on all your debt and you got a credit card with a $5,000 balance on the Discover, and the balance is $5,200 because you just quit paying it in 07 and 08 when everything crashed, that one's going to hit your revolving debt utilization ratio until it's satisfied or sold to a collection company. Then it comes out. So a lot of things to consider on the old debt. Accounts closed and not used for 10 years may fall off your report. Authorized user still works. We talked about that. Credit scores don't look at your age, your birthdays, your income. Student loans. This is getting huge. Student loans debt is larger than credit card debt. We're going to talk a little bit more about that in a minute. But student loans in deferment, the payment history is not used and utilization ratio is not calculated as long as they're in deferment. That means usually they're still going to school. Won't spend a lot of time on this screen. Basically, there's a waiting period if you've had derogatory credit in the past. So bankruptcies, 7, 11s, 13s, multiple bankruptcy filings, foreclosures, deed in lieu, short sales. All those we want to make sure they're reporting accurately. And what we found many times is there's balances on old second mortgages. There's foreclosures started in comment sections that can be removed. So a lot of this stuff you just need to go through it with a careful eye and get it reporting accurately. You know, is it dated correctly? Are they updating one? I had a client with a bankruptcy yesterday, 5-year-old bankruptcy, and they updated one of their bankruptcy accounts in the data last activity box, 12 of 15. I couldn't believe it. So it was scoring like this 5-year-old bankruptcy account was now a current bankruptcy. It was one mistake in that one little box. Yeah, when we do disputes, we're disputing the information in those little boxes. So credit restoration is not always about getting something deleted. It's getting it, like I said, corrected and making it accurate. All right. I just put this one together last year. Millennials and student loan debt, because this is so huge. A lot of people don't know this, and this is your guys' market. We talked about the renters right off the top of the show. The millennials are bigger than the baby boom generation, and they have not started buying. This can refuel our next recovery. As soon as they start buying, it's going to be huge, huge, huge. Student loan debt surpasses the credit card debt, 1.1 trillion. Just some information for you. Credit adverse. Many of the millennials don't want a credit card. And study after study. So what we're finding is when they come in to you for a mortgage loan or they want to buy a home, they have low scores or no scores. Send them to us anyway. We will coach them on where to go and how to get their scores up. Everything I've shared with you, we do this with our personal reviews with your clients. Student loans, first thing you want to determine on those, are they personal or government backed? Personal student loans are treated like regular debt. They can be filed in a bankruptcy if a person so chooses. They can be sold to collection companies. Government-backed student loans cannot be filed in a bankruptcy. So the first thing, if they've got them, we want to determine what kind of student loan they got, and then we'll coach them on the action plan to get those back so they're reporting accurately and on time. And again, the student loan and deferment, already talked about that. Now, people with no score. I love this slide. People say, well, what do I have to have a score? And this can happen. We've seen these with retired people too. If you don't have, remember I told you earlier, if the only thing that drives your scores up is your open on-time credit. We see a lot of retirees now that have everything paid for. So they are not using their credit cards. Their scores will go to 0. They go to NA. They can't calculate. What do they have to do? Well, for them, they can just go use their credit card once. It reactivates everything on their report, and their scores pop right up. Not a big deal. So if you don't have a score, what do you have to do to generate a score? And I did this with my son. Have to have an account at least 6 months old with updates, and it has to be on time in the last 6 months and not be under dispute. So they need a credit card. First thing we want them to do. I got my son one. He got a little credit card with a $200 limit. Got to the 7th month. On the 6th month it reports, it'll generate a score. And I've had some of you out there send me credit reports and they've got a credit card and it's 4 months old. I say in 2 months they'll have a great score. Okay. Older models of scoring have caused a 0. So you have to have this one report on time for 6 months, and guess what else you have to have?
What?
You have to be alive. You have to have a heartbeat.
Yeah, true.
That's the only 2 things you have to have. So something reporting on time for 7 months, and you have to have a heartbeat. Let me see. So what's your credit score mean? A lot of people say, well, how do they calculate this? What is this all about anyway? Well, here's how they came up with this. The mortgage FICO score predicts the chance of you, a consumer, becoming or having a 90-day late on a particular loan over a 24-month period. That's what the whole model is about. What are the odds of you getting a 90-day late on a loan over 24 months? So that's what the algorithm does. So when they make a change to a credit bureau, an algorithm, they test it for 2 years. So they pull in millions of reports and run through a scenario and say, if we change this, what will it do to the score? Or how many more people will default or won't default? So I'm sure they did that with this new medical, the new medical collections, where they decided just to take them, once they're paid, they're going to come out of the algorithm. So it takes them 24 months to do the testing before they change it. The score is generated by analyzing information contained in your credit report at that point in time. Remember I said a picture? At that particular point in time, it pulls all your info in, and this information is only available on the 3 bureaus, not the 4th bureau. There are more credit bureaus out there. In fact, there's a ton of them. Innovis is the 4th bureau. I'll talk a little bit more about that in a minute. Public records. People always ask me. They can stay on a credit report for 10 years. Okay, these are items that have usually been through a court of law. IRS tax liens and judgments may be permanently removed if they're from the IRS, so that does not include the state tax liens. Even if you're making payments, 6 to 9 payments, this program allows them to come off. Just get a hold of us. We'll try and get those off. I will tell you, if you only have one item in your public record box, so let's say they've got one IRS tax lien, and you get that off, your scores can go up 30 to 50 points on all 3 bureaus if your public records are clean. So that can be huge for people. Bankruptcies are not verified at the courthouse. A lot of people think that's where they're verified. They're not. They're usually checked and verified through PACER, which is public access to electronic records. There's also another place, and I will tell you this, if you go in to get a loan and you've had a bankruptcy, you might as well tell them, because they're going to do a title search on your name, and it's still going to be at the courthouse. So we've gotten bankruptcies off credit reports, but don't think it disappeared because it's off your report. It's still out there. If they do a title search on your name, the bankruptcy is still at the court, in the court records, and at Pacer. And again, it's available. Innovis carries it too on the 4th Bureau. Personal records. If you can't get a bank checking account, check systems. Here's another credit bureau for you. We advise our clients on this. I can't get a checking account. Well, that usually means you bounced a check somewhere. You can go to check systems, pull a free report, check systems report. It's a database that the banks use, so if you go in and apply for an account, you've got a bounced check somewhere, it shows up in check systems and they deny you. You get a free report every 12 months. The cool thing about check system is stuff only stays on for 5 years. And we can dispute check systems for your clients also. So we can help them fix this issue. All right? Innovis is the 4th Bureau. You get one free report per year from Innovis. There's the number, and I'll send you guys that information. Your homeowner's insurance. That's a huge. They have a database called CLUE, the Comprehensive Loss and Underwriting Exchange. They'll keep track of your claims on your homeowners for up to 5 years. So that's why if you make a big claim and you try and switch companies, they all know about it. All right, it's called CLUE. Pretty interesting, huh?
Yeah, very much so. A lot of stuff I didn't know.
I know. All right, when we go through your credit report, do a free review. The other thing is identity theft is one of the #1 white-collar crimes in America today. You always want to check at the bottom of a mortgage report, especially, your name, your surname, your middle name, and any of the AKAs, all right? If it's common name, Jones, Smith, you'll start to see other people's stuff come on. I see multiple Social Security numbers once a week now. Once a week. Addresses, home and work, make sure they're yours, especially if you got someone else's social or birthday on there. Make sure your birthday number is the same. Scan the whole report, Social Security numbers. Even your spouse's number should not be on your report. Your report, even on a merged credit report, is its own file at all 3 bureaus. Birthdays, make sure they're all the same. So we check this. These are easy things to fix in the first rounds of disputes. But just don't forget about looking at them. Here's something that no one ever talks about, is the #1 cause of divorce is finances. If we can help you fix your credit, you're going to be healthier. And no one talks about this component. Not only are you going to change your life if you can buy a house, you're getting your kids into the schools they want to get into. I mean, that's the goal. No one wants credit repair. No one wants credit restoration. They want a home. They want a car. They want good credit. The other thing I think people forget about, and I started picking up all the studies on this because employers are worried about this: productivity, ulcers, migraine headaches, 29% severe anxiety compared with 4%. Severe depression, 23% compared with 4%. 6% had heart attacks, twice as many as in the lower stress groups. This is a byproduct of getting this financial dilemma or crisis behind you. And people never think about this. But I could tell you your employers are thinking about this. All right, New York had a huge settlement. And the bureaus agreed to 5 major changes, and this is where the medical collections comes in. So our environment as a credit repair organization is changing all the time, just like you guys need continuing ed. I go to numerous seminars. I've got my gurus. I pick their brains, and they're trying to make it better for the consumer. Medical collections will report soon after the deficiencies. Now they're going to have to wait 6 months before the original date before they report it. That gives you 6 months then basically to rectify this if it's yours and get it settled. So that's good news for the consumer. Medical collections being paid or were paid by you. Insurance now are immediately deleted. Again, they're not going to count, even if they stay on there from what we've been told when this is fixed. And these are all going to be implemented in the next 3 years. This just happened late last year in New York. Credit repair agencies, that's Equifax, Experian, and TransUnion, now review disputes and proof that you send with it. This is going to make you guys sick. when you send in a consumer dispute with your proof, half the time they never read it. They convert your letter, and you'll say, I'm disputing a 30-day late. Here's the proof I mailed it on time. They'll send it and convert it into a 2-digit code. They send it to the creditor. The creditor looks at it, checks their records, say, no, they had a 30-day late, send it back and say verified. It was all automated through this eOscar system. It was all automated. If you ever get a chance, watch the 60 Minutes. Pull up 60 Minutes and put on the credit bureau and interview the credit bureaus. It will just make your head spin. So no one ever looks at this. This new law is going to force now these staff people to review the information you send in. Now we have techniques and tactics we use with our advanced tactic disputes to get them to open the mail and read what we send them, the proof. But now they're supposed to, if the proof is sufficient, fix it. So if you got late with Citibank and you got the proof, they'll fix it at the bureau level. Don't even have to go to Citibank. So they'll fix it.
Great.
Collection accounts not listing or original creditor is deleted. We see this all the time. Collections are misreporting. Half the time there's no name of a company to even call. It says NA or it just says collection. Well, that's illegal. How can you even call them? So now they're going to delete those if they don't want to put their name on there. And you get your free copies of reports. So if you enter into disputing any of these issues in the future, you can continue to get more than one free copy of your report from Annual Credit Report. So these are 5 changes of a huge 6-page document. I just picked out some of the major things that are going to be happening for the consumer, all positive, in the next 3 years.
Good stuff.
Yeah. Now here's the crux and the problem with that. These are all going into the newer versions of FICO. So if the mortgage companies are still using 5, 4, and 2, they may not apply. So we'll see how all that shakes out. Yep. All right. Fun money tip. We're getting down here to the end. We'll start doing some Q&A because I know you guys got some great questions that you want to ask me. I hope I've stirred up some. I always like sharing this. I always have usually one person in the audience that finds some money. $58 billion is unclaimed. Go to these are free sites, by the way. They don't charge you. You can search your name. If you've ever owned a business in a state, search the state, missingmoney.com, www.unclaimed.org, and you can put your name in, your mom's name, your relative's name, relatives, and do a search and see if there's any money out there for you. Last time
we can all use some more money.
Yeah, and it's free. Last time I did this on a live event, a lady stood up and said, hey, last time I was on your webinar, I got $400. And it was an old insurance.
Oh, that's great.
From an insurance company. Yeah, there's a credit sitting out there somewhere. I was like, awesome. So, yeah, so just check it. $58 billion, it's somebody's money.
Absolutely.
All right. So, again, we make it easy to refer clients. We're winding down here. If your clients do not score or qualify, we'll do the free review. If they say yes, shoot over the name, phone number, and email address to info@usccra.com. We'll follow up with them. Forward a copy of the credit report if you can. If you don't worry about it. We'll cover the rest of it with them. And this information I shared with you guys very quickly, we'll do a full audit of their credit report. And we basically go over all this stuff in detail with your clients, and we help them going forward so they can always have positive credit. And once we get them out of the hole and they get their financial crisis behind them, we want to keep that going. So my second mission in life. This is Ryan, our stepson now. We celebrated 8 years of our kidney transplant last year. He graduated from IU, Kelley School of Business, got 3 degrees, smart as a whip, gainfully employed, and the kidney's still working. So we're excited about it.
Oh, good.
But what has changed about it now is I am part of the Indiana Donor Network, and I go out and speak on their behalf and tell our story, and it's part of my mission now in life. So it's been a really life-changing event. And the reason it's important, if you guys aren't a donor, think about it. If you don't want to do it, no big deal. This is the federal website where you can join. This is Indiana's website here, but there's 22 people that die waiting for an organ. So one organ can save up to lives. Yeah, just a lot of people waiting. So this has become another one of my missions besides helping people with their credit. And our free gift to you, and I'll get this over to you guys so you can get this out to everybody who's on the call today. I'm going to tell you where you can get your Innovis credit report. All right? If you've ever had identity theft, you need to fix your Innovis credit report. It's free. It's only about 3 pages. It's not huge like a big credit report. It's just certain specific data. And I tell people you get one every 12 months, just check it. If anything's on there that isn't yours, it's easy to dispute. If you have a question about it, it's free. So I'll send that over to you guys. I've got 9 easy tips to increase your credit score. I'll shoot that over. And how to monitor and get a copy of your credit report for free. So if you guys are paying for credit monitoring and you've never had an issue, you can use the www.annualcreditreport.com. Remember, you get one report every 12 months from all 3 bureaus. My suggestion is if you want to do your own monitoring for free, pull one every quarter. You get one. Pull one, and then every 12 months you're getting another one. You're not looking at all 3 bureaus, but if something's going to get stolen or it's identity theft, it's going to show up on there. All right? Here's my contact information. So info@usccra.com. There's my office number, and I can leave this on the screen if we want to do Q&A.
Yeah, that sounds great.
I'm ready to rock and roll.
You're ready to rock and roll. Let's take a look at some questions and see if we can get some answers done. Let's see. Someone mentioned that you have a book. How they buy it?
Yes, my book is Creating Customers for Life. It's more of a business book. I'm currently working on.
That's what you're holding.
Yep. Yeah, if they want to buy it, they can just send me, shoot me an email. I've got limited copies of those left, but I'm more concerned about my new credit book that's coming out.
Okay, great. What type of, what would you suggest as far as paying off on credit card? We've heard some people say leave 50%. Some say you want to only have 10% and 90% paid on your credit cards to increase your score.
Great, great question. As I said, it's not logarithmic. When you pay it down, if you're at 100% and you pay it down to 50, you're going to get most of that 40 to 60 points. So last time I did it on a simulator, I found that if you got it down to 15% of the limit, you'll get almost all the points. Now, if you keep it below 30, I know a lot of people say 30, you're still getting most of the points. It's just how close are you to getting a mortgage? You know, when I see people at 590 and they got to get to 640, man, just go ahead and pay it down to $1 or pay it off. Well, don't take a chance if you've got the funds. If you don't have the funds, here's what I tell people. Pay them all down equally as a percentage of the limit with whatever you can for the next month. So get them all at 60% of the limit, then get them all down to 50% of the limit. So don't leave any one of them high is the main message. The main goal. Okay. Yeah. Do you only work in the United States, or do you work with people outside of the U.S.? What country? Canada's credit scoring system is totally different. Germany does not have any. Yep. Okay. Yeah. You didn't ask that question, but. So I'm not sure. Yeah. But yeah, the credit scoring algorithm basically is mostly U.S. based. Okay. You get outside of this country and you'd be amazed what they do in Europe. Oh, okay. It's totally different. Yep. I'm trying to read as we're talking here. Some of these we've already answered in class. Can some of our members use your presentation if they're wanting to present to their agents, or to their clients? Could some of our agents that are on the class now present your PowerPoint, share that with them? Would you be okay with that, or? Well, here's my only thought. If they use my slides and they misrepresent or misspeak on any of those items, I don't want to be liable for that, because unless you know. True. Yeah, and you're answering questions, because typically what happens is if you do a presentation like this, then you get deluged with questions, and if you don't know what's going on, it's really hard to give a great answer that's accurate. Correct. So I might be a little skeptic on giving that out, giving that information out. But I don't mind doing the webinars if someone wants to schedule a webinar like this. Absolutely. Yeah. Run through it again. To talk with them and do that again for them. Yeah, 'cause this is
Another
only one
question,
series, so.
right, is how do you find check systems? Is it checksystems.com or
Yeah, actually you
you
can
had
Google
mentioned?
check systems.
Mm-hmm.
It's consumer, it's got a really weird website. So Google check systems, and then
Mm-hmm.
it'll take you to their website. And on the site, it's got a spot where you can either do the 800 number, or you can, there's a website, you can just punch in your information. That's what I did. You can type it in, and it's basically your name and address and your phone number, and you
Okay.
send it. They'll mail you your check systems report. It's usually 3
Okay.
to 5 pages. If you've got any
Okay.
checks on it, you see it at the top of the page. Real easy to read. If you have any trouble reading it after you get it, let me know.
Okay. Another question was, how do you dispute the clue report? If there was something on there that is there a way of disputing that report?
We've never disputed a clue report. I typically just share
Okay.
that with people because if you've ever made a huge claim and then you found your homeowner's insurance to double and then you go shop it, they're all looking at it. So I just want consumers to be aware that that stuff is tracked in a huge database before they make
Okay.
their claims on their homeowner's insurance. But if it's inaccurate,
Okay.
it could be disputed just like anything else, but you'd have to have the proof. And usually if you make a
Okay.
claim and they paid out money, they've got proof they wrote someone a check. So.
True. So what do you think about LifeLock? Is there a big difference? I mean, obviously, what would be the difference between your company and LifeLock?
Yeah, well, we don't actually do any of that. I mean, if you've had identity,
No
we can help,
okay,
yeah,
gotcha.
yeah, we can help you clean it up. We do not require our clients to have monitoring. So
Okay.
when you enter in with us, we don't need it because you're going to get, once you do a dispute, you get responses back from the bureaus. We use that to update your file and to see how you're doing.
Okay.
So LifeLock is more for identity theft protection. It doesn't do anything to fix your credit. That's just identity theft protection. They're monitoring your stuff in case you have identity theft. The problem is once it occurs, then you have to have someone fix it, which is what they say that they'll do, which is probably what they do. Do you need credit monitoring? Might be the more appropriate question. That's entirely up to you. That's why I said if you want to do it for free with annualcreditreport.com, you can pull one bureau every 4 months and cycle it through, so you're always checking one of your bureaus every 4 months. And it would be free. Yep, that's the only thing I was saying, instead of paying $10 or $15. If you've never had identity theft, you may not need it.
That's true.
But if you have a brother, sister, or an uncle with James H. Jones Jr. and your dad's James H. Jones Sr., and I've seen them, it's a mess.
Another question was 7 years from the original collection date. Is it the date of the collection or is it the date that it was placed on your credit report that they take?
On a typical mortgage report, there's 3 dates. There's a date reported, the date opened, and the DLA, which is the date of last activity. The open date is the date that collection company should have opened it and put it on your credit report. So if that's 2 or 3 years old, that particular collection is probably not hitting your scores. The date reported, it doesn't matter. They can put today's date on the date reported box and won't hit your scores. Now the date of last activity, this is what we see all the time, is the collection company will update that date. That one will hit your scores because activity is supposed to be a payment. And if they update that date and make it new, that's the one we see that's misreporting. And what is the date of last activity? That should be the date of last activity with the original creditor. So that's the date you either defaulted with the original creditor or the date you quit paying them.
Okay.
Yep.
Yep. Another question was if someone has a bankruptcy and it included some credit card debt or collections, and the bankruptcy is removed off of the credit report, but the credit card collections are still there. That's where your expertise would come into play in helping them with that issue too, as well, right? been
Correct. Yeah,
passed.
and we see that all the time. Anyone who's went through a bankruptcy, I will tell you, it's not the attorney's job to clean up your credit. And what we find is many times a lot of the bankruptcy accounts are left open. There's balances on the cards. Your attorneys don't do any of that. And so all that needs to be checked over, and it can be just a quick review. We call it bankruptcy cleanup here, but we can clean all that stuff up in a couple of rounds of disputes. If they get a credit card going, once that stuff is aged and reporting accurately, and you backdate all of it, now if it is over 7 years old, it can be permanently deleted. But we can really clean up a bankruptcy client.
And another question was, what are the costs associated with your service? Do you have a range that you go by, or is it individually?
Yeah, actually, we've got a couple different programs. The monthly program is $195 to start, $97 a month. They only have to stay in the program as long as they need our services.
Okay.
And we dispute all negative items on all 3 bureaus. So our clients are typically done in 4 to 7 months. If there's only a few items, then they're going to get done quicker than that.
So the normal estimated time is usually between 4 and 7 months. That was another question. Awesome. Awesome.
And I tell people, you didn't get into this mess overnight, and you're not going to get out of the mess overnight. And you have to remember, they have a 30 to 40-day cycle on every round of disputes, and not everything's going to get fixed on the first round. I can guarantee that.
Right. So another question was putting their children or grandchildren on their own personal credit so that when they do decide to get credit, they'll have a great score, and that's something you recommended, right?
No, you really need to wait till they're 16.
Okay, till they're 16. Okay.
Yep. Yeah. Yeah, and I think they might be passing some more laws on that too now, where they're starting to check the dates. Actually, we've seen a lot of identity theft. They're stealing the identities of kids.
Oh.
Yeah, so they're grabbing the kids because they've got no credit profile. So they grab their social security number and then they steal their identity. So, and over 50% of identity theft is someone that you know.
Mm.
It's usually a relative or a family member, unfortunately.
That's sad, yeah. So what is the difference between when you had said pay off and do not close account? Could you dive a little bit deeper in that, what you mean? And you want them
to... if you've got 5 credit cards and you want to buy a mortgage, of course you want the fewest number of payments so you can get as much house as you can buy. So our recommendation would be pay your cards, go ahead and pay them off, just don't close them.
Okay.
Then you've still got the open revolving trade lines, your debt utilization ratio looks good, and you got no monthly payment. Now you're going to be able to qualify for a higher mortgage payment, so you can buy more house. So if you got more than 5 cards and you want to close some of them, it's really a personal choice. I tell them then close the department store cards first, the Target, the Macy's, Finger Hut, stuff like that, and keep your Visa and MasterCards.
Okay, good. I think we've gone through and answered most of these questions during the class time that we were here, but they can always reach out to you for more questions. I think I did tag you in the post that I made on Agent Mastermind, so they can reach on Facebook too. Is that okay? Jim?
Awesome. Yep.
Okay.
Yeah, the best way to reach me is shoot me a note at info. That one my staff checks, so yeah, I can stay on that one.
Okay, great. Well, I thank you, sir, for being here. Hope everyone gathered some great information. And I think we're all set. So you have a great rest of the week, and see you next week on Agent Mastermind. Thanks, everyone.
Thanks.
Thanks, Jim.
You're welcome. Look forward to serving everyone.
Thank you. Talk to you guys soon. Bye.